Hello, traders, and welcome to yet another episode. This is the year 2025. Actually, let me begin by apologizing for not uploading videos, educational videos, for the since the start of the year. I know already the first quarter is gone, so we're in the second quarter, but I apologize. Sort of a busy schedule, but again, I have some good things for you this year. So, for the first video of the year, I just want us to begin by refocusing our minds. And basically, in this video, I'm going to share some key tips that will help you um, to reshape or to rethink your mind, basically, such that if you're to begin Forex afresh, what are some of the things that you could consider? So, these are things that I'm talking out of experience. And basically, this is so much based on me that, hi, Timothy, if I was to begin Forex trading afresh, how would I have approached it differently? So, meaning that I'm going to share some of my mistakes that I did when I was beginning Forex, and this video will be very much helpful for a beginner who is looking, or for someone who is looking into jumping into Forex trading or engaging into Forex trading, and also for someone who is into Forex trading but yet not profitable. So, let's get it. So today I don't have anything to share, slides or something, because this is a very personal experience that I'm going to share here. All right. So there are some few things that are very important that I would consider um doing them if I was to approach Forex differently. So this means that when I was beginning Forex, I overlooked into some of these things that I'm going to share, and it made my Forex journey to be longer in terms of being successful. And I'm going to share 10 things. So the first thing, if I was to begin Forex afresh, that I would consider is education, or what we call learning. So when I began Forex, yes, I learned. It's not that I didn't learn. So the first person, when I heard about Forex, I was in the banking industry. So the first person who I encountered, that was a guy from my church. Um, this guy basically gave me a PDF. He charged me 8,000 Kenya shillings back then. That is 9 years ago. And he sent me a PDF of candlesticks charts. I have never been into Forex. I am very new into Forex. And here I am. I'm just been exposed to candlesticks charts. So it was very difficult. And actually, once the PDF of the candlesticks chart was the first and the last to hear from that guy. I tried to reach out via phone, via WhatsApp, via text message, but the guy blocked me everywhere. So it was very difficult. Then I began doing it by myself, basically analyzing or trying to get information by myself. I went into the school of Forex. Yes, there is a lot of valuable free information in the school of YouTube. Right? I went into the school of YouTube. There is very valuable information there. But the problem is that I didn't know where to start and where to end. Like, I didn't know that I was supposed to begin from the basics, then intermediate, then all the way to advanced. So there was no the chronological order of studying. So I really wandered around, trying to do my own things. Thought that I have now understood what Forex is, and I funded my live account. And you can know what followed. I blew several accounts. I blew several accounts before then, after some time, that's when I came to meet a friend of mine. uh by then he was not a friend, but I came to meet someone who has now turned to be a very good friend of mine, actually a mentor I look upon him. And this person now introduced me into Forex trading the proper way. I was taken through education from basics to intermediate to advanced, and with a lot of support until I was well established in terms of now that I can be able to do this thing by myself. So, yes, when I was learning also, I was taught different strategies. But what really matters, or what I came to understand along the way, is that there are so many strategies that we have, and you find that a beginner can wander through basically or can waste a lot of time, especially in terms of trying to identify what strategy to use, because you'll meet so many strategies. Even after being trained, I was not taught all the strategies. So as I kept going, trying to research more, I met other trainers who had different strategies. So I was hopping from one strategy to another. So as a beginner, one thing that you need to understand or learning from my experience is that it's good to invest in education and proper education, not just going in the school of YouTube and trying to find the information by yourself. You feel that you're not warranted to pay maybe someone 10K or 30K or whichever amount of money for you to learn, right? That's the biggest mistake that you can make. So once you learn, you'll be taught different strategies. So the key thing is to follow one strategy and master it. So avoid strategy hooping. Focus on understanding the logic behind one approach. Maybe, for instance, you are a CMC trader, CMT trader, CMC trader, that is smart money concept. Or maybe you are an inner circle trader, that is ICT. Or maybe you want to specialize on supports and resistance, right? So it's good to focus on understanding the logic behind that one strategy that you choose to focus on. Then you need to invest in quality mentorship, all courses, like I said. So don't rely on free content from YouTube. Honestly, this is not going to help you. But if you have undertaken a serious mentorship, and then now you can go to the school of YouTube and try to research for more information. You'll be able to gather now. It will start now making sense because when you go to the school of YouTube, you are basically going to build on what you have already learned, right? So it's good to also get into communities that support structured learning and feedback, like what I do in the Discord community. So it's also good to understand market structure and liquidity, all right? Irrespective of the strategy that you're using, honestly, I would say that market structure is very important. Whether you're using supports and resistance, you need to understand whether the market is bullish so that now you can buy at support. You need to understand whether the market is bearish so that now you can look to sell at resistance, right? And also the liquidity aspect, you need to know where the liquidity is, because if you are not able to identify the liquidity, then it means you are the liquidity. And if you are the liquidity, then it means you are losing money, all right? So the second thing that you need to understand is, or the second thing, if I was to start Forex trading afresh, the second thing that I'll build on is mindset and expectation. Mindset and expectations. So remember, Forex trading is a game of mind. So when I started Forex, when I was a novice trader, there were some spreadsheets that we were given that they could show us how we were able to compound maybe $100 into 90 days and you get into $1 million. So you see now with that kind of perspective, you're just very new. Someone is showing you such kind of spreadsheet how you can be able to compound $100 into $1 million. So definitely that alters with your mindset. So you start setting unrealistic expectations. So you start looking at Forex like a get rich quick scheme, which it is not, right? So and that one actually really affected me because I tried severally depositing $100 account, trying to turn that $100 into $1 million within 90 days. I ended up blowing several account. I even didn't reach $1,000 compounding that account. So along the way, things get messy, and I found myself basically blowing several accounts. So the best way to approach it is you need to start with realistic expectation. So understand from the back of your mind that trading is not a get rich quick scheme. So you need to focus on skill development over quick profits, because that's one of the mistakes that novice traders make. I also did that mistake. So I didn't focus on skill. Rather, I focused on making quick money. All right. So also, I didn't treat forex trading like a business. All right. So I saw it like it's just something that I can be able to do aimlessly, anyhowly, because I could do it from wherever I am. So I didn't take it like a serious, I didn't view it like a serious business. So again, that really altered my mindset. So the best way to approach it is, if I was to begin right fresh, is to create a trading plan. Of course, now these are the things that I've already put in place, right? So, but for you who want to begin or who is looking at beginning forex, or you're in the beginners level, so it is good for you to treat forex trading like any other business. So, create a trading plan, structure your day, and track progress, and also have a way that you can now be able to review your progress, right? So then you need to detach emotions from trading. This is very important because I remember actually what made me to blow even more accounts is because the moment I lost, or the moment I made losses, I was very emotional because I couldn't believe that I can lose. So any moment I lost a trade and made some losses, I was so emotional, and this led me now into doing what we call revenge trading, and it actually made me even to blow more account than maybe I'm supposed to blow maybe to blow more account more than maybe I'm supposed to blow. All right. So it's good to detach emotions from trading. So you work on emotional intelligence and psychology as early as possible. All right. Then number three thing, if I was to begin forex afresh, is now to focus on what we call trading plan and journaling. So we have said Forex is a business like any other business. So when I started Forex trading, I didn't know anything to do with a trading plan or journaling trades. Actually, no one taught me about that. I didn't see like uh it was really necessary. Yes, I could see people mention it in the school of YouTube, but now I didn't see, I took it like basically a waste of time. But do you know, for me not journaling, I wasn't able even to be able to evaluate my losing trades or even to be able to track my progress. And this actually delayed my journey to successful trading. So you are there beginning Forex afresh. The third thing that you need to focus on is having a trading plan and journal your trade. Build a very solid trading plan from day one, because you are jumping into forex trading. So you need to have a plan. They say if you don't have a plan, then your plan is to fail. So in your trading plan, basically look or define your entry and exit rules, your risk management, trading hours, and daily goals. So I did a video last year explaining about trading plan and journaling. Maybe you can go to the videos and get that video. But also I'll put the link for that video in the description so that you can see how you create a trading plan and also journaling. Also, I'll be able to provide to you a template that will help you to journal. So you'll get the link in the description for the template, and you're able to download that template. And now you begin journaling, because It is important to journal every trade, not just the winning and losing bit of it, but the reason behind the trade, the emotional state, and the lessons learned. All right, it is important to take all that into perspective. Then the fourth thing that I would reconsider if I was to begin Forex afresh is risk management. This one, it's really big. Actually, it really affected me because number one, I regarded Forex like a way that I am able to make a lot of money. So definitely for me to make that big amount of money that I had in my expectations, then it means I went against the risk management rules. I risked more than I could afford. So, when you talk about risk management, so if you're starting Forex afresh, my advice to you is to start small and scale later. So you focus on preserving capital, not flipping accounts. All right. So you're beginning small. You're beginning small. As you get more experienced, as you get more exposure into the forex market, then you're able to scale later. So because the key goal here is to preserve the capital, not to flip accounts. Because I've seen traders depositing $100 and they want to flip that account in maybe within 24 hours, right? So the other thing is to stick to strict risk per trade rules. That is the rule of thumb that I've always emphasized on is do not risk more than 1 to 2% of your account, of your capital per trade. And if you are taking multiple trades, let's say maybe you are taking maybe 5 trades at a go. So ensure that the cumulative risk of those 5 trades do not exceed 2% of your account. And also now you stop doing what you call revenge trading. So in case you lose, understand that losses are part of the game. Actually, losses, maybe I can say, in another word, I can say that losses are part of the school fees that you pay for learning. So once you make those losses, don't delve into revenge trading because, like I said, myself, I used so much to revenge trade, especially when I made losses because I couldn't accept a loss. I couldn't believe that I can make a loss. Then, under risk management, also what is important is to use proper lot sizing. So don't over leverage. Do your due diligence in terms of maybe what you need to how you need to come up with a best lot size. We have lot size calculators like Baby Pips. When you go there, they have a lot size calculator. So this will help you not to over leverage due to greed or fear of missing out. So that's a very important aspect that you need to consider, especially in risk management. As well, in my YouTube, I made a video about risk management. I'll also be able to share the link to that video as well in the description so that you can check and you are in a position that now you know how to exercise proper risk management. So the other thing or the fifth thing, if I was to begin Forex afresh, that I could put into consideration is backtesting and data analysis. So in Forex trading, one thing is that we focus or we look at the future, at the past, so that we can be able to predict the future. So we analyze the past data or the past price action so that we are able to predict where the price is going. So this is one thing that I really missed, especially in validating my strategy. So when I got trained, I didn't take time to backtest the different strategies so as to know whether they work, also as to know whether or the key things that I need to improve on, right? So I just went straight. I knew maybe when the price comes at the point of support, just buying. When it comes into resistance, I'm just selling, right? So I didn't take some time to be able to backtest the previous price action or what we call data analysis. So if I was to begin afresh, I'll begin by backtesting thoroughly. Even before I begin live trading, I'll do a thorough backtesting for you to be able to validate a strategy. I will suggest doing like 1 year data, the last 1 year data. So if I'm beginning today, so I'll start by backtesting the entire 2024, all right? The entire 2024. I backtest that strategy and journaling those trades so that now I can be able to validate maybe the winning rate or maybe probably know some few areas that I might be able to improve on, right? So if you are starting, don't trade live until a strategy has been tested and proven. Okay, so don't make that mistakes. Don't make that mistake that I made. So make sure that before you trade live, you have back tested a strategy and proven that that strategy works. Then it's important to collect and analyze data. So use spreadsheets or tools to track win rate, risk to reward ratios, drawdowns, trade setups. So here you can use your journal basically by journaling those trades even as you backtest. You journal them and you'll be in a position now to be able to know the drawdowns, the risk to reward ratio, the trade setups, etc., etc. So I'll be doing a video on back testing and you'll be able to understand how we backtest. So the sixth thing that I would consider doing if I was to start Forex trading afresh is discipline and consistency. Discipline and consistency. So this falls under the psychology of trading. Remember, Forex trading is 90% psychology. All right, it's 90. Actually, they say 60% psychology, but to me, I regard it as 90% psychology because the bigger chunk of it is not even about the strategy, but it's all about psychology. So things to do with the discipline and consistency. So when I began Forex trading, I was not consistent, right? I was not disciplined. Definitely, I used to to regard quality, quantity over quality, right? So I didn't follow. I didn't even have a trading plan, by the way. So there was no aspect of discipline on me and consistency as well. So, but if you are there, you are in your beginner's level, or you want to jump into Forex trading, the first the key thing is to now build on your discipline and consistency. So there are 3 points that are very important when we talk about discipline and consistency. So I'll advise that you trade less and observe more, right? You trade less and observe more. So quality over quantity, it's very significant, right? It's not quantity over quality. It's quality over quantity. So you better take 2 to 3 trades per week, but high quality trades, right? So that means that you're only taking the best setup. You know, one funny thing that when I began trading, I don't know, it's because out of excitement, but I really felt good when I opened my MetaTrader 5 and see trades running. So it was not about quality to me, but it was about quantity. I felt a kind of excitement when I could open the MetaTrader 5 and see some trades running. So, but that was it really taught me a very big lesson, basically making losses, blowing accounts. And right now I can tell you, I only do 2 to 3 trades max a week. That is a high probability setup. Okay, so then it's important to create a daily routine. So there is what we call the pre-market preparation. There is also what we call the post-market journaling and the market review habits, right? So pre-market preparation, this is whereby now you are doing your analysis. Of course, you begin your day by maybe affirmations. You're going to talk more about that. Um, then you can now begin by looking at the technicals, trying to analyze the charts. Then you can look at the fundamentals as well. You do your fundamental analysis, your sentimental analysis. Then now, once the trade materializes, a high quality setup, you can now take the trade. Then after the trade's outcome, you do what we call post-market journaling. So you start now journaling those trades that you took. And then after that, you need to create some habits, which I call market review habits, all right? Such that you are able to review now what you have journaled. It's not about putting trades in a journal, but the purpose of this journal is to help you to review the trades that you took, whether they were profitable or not profitable, because you still learn 2 or 3 mistakes that you did, or some things that you can be able to improve even on your winning trades to make the winning rate higher, all right? So also, it's good to detach yourself from outcomes. All right. So focus on executing your edge, not the results of any single trade. Okay. So the moment you attach yourself to the outcomes, that's when now you'll take a loss. And now, because you have attached yourself to that loss, then what you'll be able to do is you start now finding yourself doing things like revenge trading, or maybe now fear start coming into place. All right, even the winning trades. So if you attach yourself to the winning trades, what comes into place is overconfidence. All right, you become overconfidence, and definitely overconfidence. What makes you? It will make you to ignore your risk management strategies, for instance, and then you end up messing. So the number 7 thing that I could focus when if I was to start forex trading afresh is account growth strategy. So when I began back then, when I was a novice trader, I never knew about something to do with account growth, right? I didn't have any strategy on how to be able to grow my account. So I was just trading for that day. I could see that I was living for that day. So once I make some profits that day, I withdraw. I didn't have any game plan for me to be able to grow my account. All right. So, but now if you are starting afresh, or if you are someone who is diving into Forex, very new into Forex trading, so the first thing that I would encourage you here is to start on demo, or what we call a demonstration account, transition to small live account. So first begin on your demonstration account. So what is the purpose of a demonstration account? Demonstration account is basically to help you to fine tune your strategy. All right, when you're backtesting, demonstration account is very important in terms of helping you to fine tune your strategy, or to help you to know whether you have understood the strategy really well. Then, when you transition to small to live account, make sure that you are beginning small. And small here is relative. You might find that to someone, $1,000 is small. To someone else, $20 is what they regard small. So small is relative. All right. So why do you transition to small live trading account? Is because the demonstration account is never, or it's not going to teach you the psychological bit of it. So you are going to learn more about psychology in your live account, right? And because you are new, you are still learning. Right. So the reason why you are now beginning small, this is why you'll know whether you are greedy. This is why you'll know whether you are fearful. This is why you'll know whether you are disciplined and consistent. Once you take a trade and you are negative $10, how do you behave? How do you carry along? Are you the person that is going to close trades prematurely because you've just it has just turned your MetaTrader 5 has just turned red? So these are the things that you'll be able to learn in the live account. And the reason why we are emphasizing that you start live trading small, all right? Small live account. So it's going to help you actually build confidence with consistent results before going big, all right? So that's very important. It's a growth account strategy. And also if maybe you want to compound your account in a beginner's level, it's good to also compound slowly. Don't be in a rush. All right, don't be in a rush. I know compounding interest is somehow stressful, especially in the beginner's level, because your capital may be small. But with time, maybe 1, 2, 3 years, once as your account grows, then your compounding interest becomes magic. All right, your compounding interest now start making sense to you. Okay, so how to grow a small account? I also did a video in my YouTube about how you're able to grow a small account. So the link in the description as well. So check it, and it will be able to help you, all right, in terms of how to be able to grow your account. The number eight thing that I would consider if I was to start forex trading afresh is having a community and support. All right, community and support. This is very important, guys. When I began trading, I didn't indulge myself into a community. Actually, I was doing this from the comfort of my house. So I didn't see the need of me being in a community. And maybe probably I didn't knew that a community can come alongside with support, right? So, but the moment I got to realize that, I joined a trading community. I received a lot of support whereby now my trading started making sense. Things started turning around, right? So, if you are there, you are beginning right now, or maybe you have been to forex trading and you don't have a community, and you are struggling actually, maybe being profitable. So it's important that you surround yourself with focused traders. So engage in meaningful conversation and no hype. All right. So avoid those communities that come with hype. All right. So because hype never ends well. Hype is another form of pride, and pride comes before a fall. All right. So, for this case, I have a trading community. Maybe you might consider joining my trading community, whereby we are going to share more insights. You are going to interact with the like-minded traders, focused traders, people who have taken forex trading as their full-time job, or even if is their side hustle, but again, they're taking it in a more serious way. So again, in a community, that's whereby you get accountability partners. So because accountability partners, they are very important because they are going to help you maintain consistency and review trades together. So you and your accountability partner, all partners, you sit down, review your trades together, analyze trades together, and these will actually help you to be consistency and also to be able to learn much easier without stress, all right, or without much hassle. Okay. So the number nine thing that I could do if I was to start forex trading afresh is psychology and self mastery. Psychology and self mastery. So I really struggled with psychology. I really struggled with self mastery when I was a newbie, because I actually never knew what I was doing. So I was in for money, but as you can tell, or as you will come to see, it's not about money when it comes to forex trading. It's about building on that skill, all right? It is the skill that is now able to attract money. So the skill is the magnet to the money. So you first get the skill, and then now the money will be able to follow you. So it's important if you're beginning afresh, or if probably you are beginning right now, you are very new into forex, so it's good to develop strong mental discipline. So read books, meditate, or work with a coach or a mentor. So there are so many books out there in terms of psychology. Mark Douglas has authored very important or very nice books in terms of psychology. There is The Disciplined Trader, and also there is The Disciplined Trader, and also there is The Trading in the Zone. These two books have really helped me in terms of being very profitable, or in terms of building on my psychology, which has also assisted me in terms of being profitable. So also you might consider working with a coach, right? You might consider working with a coach. You might consider working with a coach who will also help you in terms of some of these psychology mastery, right? And also to be able to master yourself. So these are the things that maybe I'm planning to do a webinar in terms of mastering your psychology. And I believe this is going to really be a game changer for you because, like I said, Forex trading is 90% psychology, right? So the last thing or the 10th thing that I'll consider when trading, if I was to begin trading Forex afresh, is long-term vision. So when I began, I didn't have a long-term vision. So I knew that within 90 days, I am gonna use the spreadsheet that I showed you, that I mentioned about, that I was told if I am going to use this spreadsheet, begin with $100, within 90 days, I'm going to make $1 million. So I knew that within 90 days, I'm going to make my $1 million and I'll be out of these Forex trading forever. But that is not the thing. As I am doing this video right now, this is my 9th year into Forex trading. So I'm still there. All right. I'm still there. So I took it very short term, instant gratification and a get rich quick scheme. So, but things came later, dawned on me that no, this is not what I'm thinking. This is not what I was told. And now I started looking at it in the long term. So, if you look at it in the long term, or if you have a long term vision, so now things start making sense, right? Things start making sense. One plus one start adding up. So how do you achieve this? So have a long-term trading goal. Know what kind of trader you want to become, maybe in 3 to 5 years, all right? Then diversify skills over time. You learn different skills. We have the macros, we have risk on, risk off sentiments, and yeah, you might even decide to do coding, and you're able to code your own strategy, or you're able to automate your own strategy. All right. So think of it in the long term. Have long-term goals. I've always emphasized on using the acronym SMART: S for specific, M for measurable, A for attainable, R for realistic, and T for time bound. Once you use that formula, then you're able to come with long-term vision, a long-term vision that is very specific, that is very realistic, that is very time-bound, that is very attainable. All right. So because again, you might come up with the long-term goals that maybe are not achievable, and you might end up maybe feeling demotivated or demoralized along the way. So in a nutshell, that's what I could focus on if I could begin Forex trading afresh. Of course, now I am in a point that now all the things that I've told you, I've been able to put them in order. I've been able to organize everything in order. And right now I'm in a position that I can be able to say that everything is working well, right? And the reason why now I was able to share these skills with you. So maybe in a summary point, so the first thing that you need to check on is education and learning. Then you need to build on your mindset and expectations. Then you need to have a trading plan and journaling. You journal your trades. Number 4, risk management. Check on your risk management. Don't risk more than 1 to 2% of your account. Number 5, backtesting and data analysis. So do as much backtesting as possible until you feel that you have tested and proven your strategy. Then be discipline and consistency. All right. So it's quality over quantity. All right. So not quantity over quality, but it's quality over quantity. Then number 7, focus on account growth strategy. Number 8, be in a community whereby you can be able to get support. And number 9, build on your psychology and self mastery. And number 10, have long-term vision. So until next time, I believe you'll be in a position to work on these 10 things. And once we meet next time in the next episode, we are going to talk about psychology mastery. So thank you so much, and I wish you all the best.